Daybreak up सुन रहे 9:01 and every Mondays and Fridays we have Tally Solutions. It's called Talk Compliance. You have any questions about corporate tax, you can get in touch with us 0586861003. To know more about Tally Solutions, you can log on to tallysolutions.com or call 800-TALLY.
And right now we have Rishi Chawla here in the studios with us. He is a chartered accountant with over 18 years of experience, of which around 17 years right here in the UAE. He is also MBA, part of Executive Committee of Chartered Accountants of India Dubai Chapter, partner of Premier Brains Global since 2011, having offices in UAE, Oman, Kuwait, previous experiences with Big Four accountancy firms. Very good morning to you, and so nice to have you here in the studios.
Thank you so much. Thank you for having me here.
So today we'll be discussing about the implications, implementation, and of course about a lot of other things as well. So really looking forward for this conversation. Now we've entered the tax year. For many businesses, many are going to come live on 1st Jan because of the calendar year, if I'm not wrong. So what are the key areas, Rishi, that you think we should all pay attention to?
Right. Thank you. Thank you for that question. That's a very interesting one. Actually, that is, I would say, the most important one, because the tax year has already started for some companies since June 2023, and a lot of companies in UAE will start from 1st January 24. Okay. So some of the key areas I would say they need to look at. One is the transitional rules. So when I say transitional rules, it means how do you work when you go into a tax year. So right now, companies with 1st January 24 as the accounting year, their tax year will start from 1st of January 24 following calendar year. So they have to look at how do they treat some of the items in their balance sheet, specifically the immovable property like real estate as on end of the year. So how do those assets will be valued when they go into the tax year? So that's a very important one. Secondly, they need to also understand that the grouping in VAT will not automatically apply in the case of corporate tax. So they have to see that the rules are different in corporate tax compared to VAT. Then there are certain rules on the provisions booked into your financial statement. So just by booking some provision in the books does not really mean that you can claim those expenses. So you have to really understand the provisions of the law. Then there is a new concept in UAE, which is transfer pricing rule, which was not there previously. So that has to be seen. So transfer pricing in plain speaking means, your transaction has to be at arm's length like you would do with any third party. So that's something interesting to look at. So there are specific definitions of transfer pricing. The party is in the transfer pricing regulations, so that has to be understood. Then we have IAS 12, which is deferred tax related. So far was not applicable for the companies here, but now that is going to be a new one which is here. And last but not the least, I would say the cut-off procedures are important, specifically for your expense provisions. So how you are booking those end of the year and how do you go into the next year. Yeah.
Superb. So let's just understand the year. For example, my accounting period starts from June till May end. So I'll get another 9 months to file the returns, just to understand the accounting period, the tax period. For example, my accounting, my books are from June till May, let's say. So will I get another 9 months, or would I have to start filing the returns?
Yes, there is 9-month period after end of your financial year to file the tax return. You get 9 months to basically prepare, get ready, and then file the return. Yes.
So for some, it might also go to 2025, right? No.
Yes, of course. So the filing will go to 2025, specifically for the companies who are following the calendar year. Okay. So for them, it will go into 25 because they've got 9 months to file it. Yeah.
Superb. Yeah, aapke bhi questions you can send us on our WhatsApp number 0586861003.
Going back to what you mentioned, you said there was a new tax law that has just come in, Jaffa or something you just mentioned in your answer.
Jaffa, you mean the transfer pricing?
Yes. You said it was something new here in Dubai. I was wondering if you can elaborate.
Yeah, so basically transfer pricing rules I was talking about, which is, when you are doing transactions with specifically the connected person. So connected person is quite a wide definition, means mainly related party, but there can be senior officers and all that. So that needs to be studied. So far, any kind of expenses to related parties are not very looked closely, but with the tax laws in place, so those has to be looked at as if you are transacting with a third party. So transfer pricing rules are talking about that. And there are concept of benchmarking, specifically in cases where you cannot understand what price you should charge from a related party. So it's a little bit complex subject, but needs to be prepared well.
And also the balance sheet, the immovable property that you mentioned, how to account for that as well when the new year starts. ये सारी चीजें भी ध्यान रखना बहुत जरूरी है.
Yeah, very important. Let me give you one example. Think about with the property going up in 2021. Right, when you purchase the property was down and it was coming up. Then you purchase a property in 2021, and you still hold that property. Now, in the name of the company I'm talking about. Then going into 2024, you still hold that property. So what happens to the profit if you sell that property at end of 2024? What happens then? Right. So that's a very important question to understand. So there are actually two options which you can look at, and the most important point in this is you need to understand what decision to take, which option to take, because you have to take one decision and follow that across, right? So the options are like this. So option one is that you follow a fair value basis of accounting, which means that at the end of your financial year, at the end of every financial year, you do a fair valuation using experts as approved by the government authorities, and follow that as a process for every year. So basically at the end of, say, imagining that your tax year is a calendar year, so at 31st December 23 you do a fair valuation, whatever value you get, and then you sell it at the end of 24. So basically the difference between the fair value on 31st December 23 and 31st December 24, the difference is basically the gain subject to corporate tax. That's option number one. Right. Option number two is you carry on with the cost model. Basically you keep the cost as it is, what you purchased, and you sell at 24. So that's the other option is the holding period. So basically now you have 4 years in front of you, so you have to pay tax for 1 year. So you do apportionment, so 1/4 of the overall profit subject to tax. Super. Now this option is important. Reason being, you don't know whether you're going to sell in first year or of tax year, after 5 years, 10 years, the implication can differ. So it's important to do certain calculation and be comfortable.
Superb, yeah. What a detailed explanation on that. Thank you so much for that. Agar aapke paas bhi sawal, you can always get in touch with us on our WhatsApp number. Moving on to the next question.
Yeah, so are there any limitations on 0% tax benefit that businesses should consider when they are established in the free zone?
Right. So, traditionally, what people have been thinking that being a free zone means 0%. Absolutely. There is nothing like, there are basically 0% available for free zone, but it's not like straight away. So there are certain conditions to be looked at. The conditions are as follows. First is that you need to maintain adequate substance. This is a very, very relevant point because a lot of companies going to struggle where they have a mainland office and a free zone office. So most of the operations are handled through the mainland office and the transactions are booked into the free zone entity. That's not going to happen. You have to maintain substance in the free zone entity, whether you do it directly through a related party in a free zone or to third party in a free zone. So that has to be maintained. Very, very important and relevant, I would say. Secondly, you should derive qualifying income. So qualifying income, basically 3 things need to be looked at. One is that any transaction between a free zone to a free zone is a qualifying income, except for the excluded activities. Secondly, there is a free zone to non-free zone. Also, there are certain qualifying activities which can also give you qualifying income, except the excluded activity, which we'll talk later. And third thing important is that if there is any other income which is not the one which I've just mentioned, that is subject to a de minimis rule, which means that any other transaction which is not a qualifying income related, that should not go over 5% of your total turnover or 5 million, whichever is lower.
Superb. In fact, talking about free zone and non-free zone and, certain activities can be considered for qualifying income. We will delve into that topic. Very interesting. Your questions on our WhatsApp 0586861003. This is Talk Compliance brought to you by Tally Solutions.
Talk 100.3.
See, Rishi Chawla हमारे साथ, chartered accountant with over 18 years of experience, and he's a partner of Premier Brains Global since 2011. They have offices in UAE, Oman, Kuwait, and he has previous experience with Big Four accountancy firms. And we are discussing about the implementation of corporate tax. What are the key aspects to remember and also to look forward to? So we were talking about the activities between free zone and non-free zone that can still be considered for qualifying income. And what kind of businesses or operations fall under this category of qualifying activities within these free zones?
Thanks, Vivek. People normally have this thinking, but I observed while discussing with a lot of business owners is that any activities between a free zone and a non-free zone is going to exclude you from being a free zone. So that's not the case. Actually, there are 13 activities which are considered as qualifying activities. So if you are doing those activities, you will still be considered as a free zone and you still are generating a qualifying income. So those activities are like this. One is manufacturing of goods or services, goods or material. Then secondly, processing. Then third, holding of shares and other securities, ownership, management and operation of ships, reinsurance services which are been approved by the authorities, fund management services approved by the authorities, wealth and investment management services as approved by the regulatory authorities, then headquarters services to related parties, treasury and financing services to related parties. Remember, it's talking about related parties in these two cases. Then financing and leasing of aircraft is still a qualifying activity. Then distribution of goods or material in or from a designated zone to a customer that resells such goods or sub-material or uses to be from part of something which is going to get sold later on. So designated zone, there is basically, just to define that very quickly, is all the free zone which have a boundary around it, which are custom controlled very well. For example, Jebel Ali free zone, Dubai Airport free zone, and we have many other free zone which are designated zones.
Absolutely.
And then the other two activities which are qualifying activities are, one is logistics services and any other ancillary activity relating to the main activities.
So just to understand, if you come under the qualifying income, then is when you get 0% tax benefit, and all 100% has to be qualifying income or a little bit of non-qualifying income, or is there a percentage to define that?
So as I said, the non-qualifying income can be 5%, which is the
5%.
de minimis regulation, or 5 million, whichever is lower.
All right. So great. So 0% tax benefit is when you can apply.
So all those that you mentioned, these are excluded activities that cannot take 0% tax benefit.
Right. So excluded activity is a separate lead. As I mentioned earlier, that when we talk about free zone to free zone or free zone to non-free zone, you can think about it, but except the excluded activity. So there are around 5 activities which are considered as excluded activities. Very simply or straight, if I put it, one is your banking, insurance, finance and leasing activity, except when you are doing that with the related parties or related to aircrafts, and then transactions with natural persons. So as we say, free zone to non-free zone, there are qualifying activities. So but if you are transacting with a natural person, the definition changes, right? Of course, there are exceptions for 4 kind of activities which you can still do with natural person and stay as a qualifying activity, which is ownership, management of ships, fund management, wealth management and leasing of aircrafts. Other excluded activities are your intellectual property right related income and immovable property, except the commercial property when those transactions are with a free zone person. So these are the excluded activity. One thing I want to shed light here, which people should pay attention, is when they are in a free zone and they are doing transactions with natural persons, they have to be careful if those activities really keep you as a free zone or take you out of it, because there are 4 activities which can still keep you in, but there are other one which will take you out. So be careful there.
Right. And if you're out, let's say that you don't qualify, then what happens to those businesses then? They have to pay 9% corporate tax?
Yes, they have to pay 9% corporate tax, and that's not only it.
Okay.
So if they are disqualified from being a free zone, they lose that benefit for next 4 years.
Oh, okay.
So even in
terms of corporate tax only.
In terms of corporate
not
tax.
the business license.
No, yeah, of course they can keep the license as it is, and 9% they have to continue paying it.
Right.
So what actually happens if a business doesn't meet the criteria to claim tax benefits within that free zone?
Is there any other way that they can probably get any benefit if not qualifying, non-qualifying?
See, as I said, if they are not doing activities relating, not qualifying, they are not doing any qualifying activities, they should ideally opt out voluntarily.
Okay.
Because as I said just now, that if they get disqualified by the authority, they lose that benefit for next 4 years. So imagine that next year you change your business model and you are doing qualifying activity, but since last year you were not a qualifying free zone, you cannot just continue doing it for next 4 years.
But
So
also, this rule is still 2026, if I'm not wrong, or I'm confusing it with something else. The qualifying income rule is only for till 2026. Is that the criteria? No. Till 2026 for free zone companies.
This point I have to come back to you.
All right.
I think you're confusing that with something.
If you have any questions, 0586861003. Also, managing the tax calculations from the business financial statements. Now, how do we go about doing this?
So tax calculations. So as you know, in UAE, IFRS, International Financial Reporting Standard, is the standard which is used here. And the corporate tax also asks you to use the same standard. So how do you start? You start with your net profit as per your financial statement, and then you do certain adjustment to it. Adjustment means one is to remove all the non-deductible expenses. So non-deductible expenses, just to give an example, such as 50% of your entertainment expenses. So, and then fines and penalties, those cannot be claimed. So there are certain areas where need to be paid attention to. Like, for example, imagine you have a head office and you're allocating the expenses of the head office to the subsidiary. So the basis you're allocating, whether that gets accepted by the authorities or not, that needs to be understood. So it looks very simple and straight, which is good. But at the same time, there are certain areas which needs to be really thought over and planned properly before you do your, especially the budgeting relating to corporate tax. And then you also adjust for your exempt income and things like that here.
Super.
Lovely. So how do businesses maintain their financial statements? I think that's quite, anyone would.
Tally Solutions will help you on that.
Yeah, definitely. Tally is one of the, I would say, best. I mean, when I was doing my articles long time back, the Tally is first software which I've learned, which I love it till today.
Wow.
Is the simplest one. See, the method used for preparing financial statement is the accrual basis of accounting, which IFRS also supports. And there is a choice given for cash basis as well with companies with up to 3 million turnover. But I would say accrual basis is the way to go. Two reasons. One is that a company cannot keep changing their basis of accounting every year. If you are using a and you are growing business, you don't want to just stay within this limit. You would rather like to grow. Secondly, when you are submitting your reports with the authorities or with the free zones, they normally expect you to prepare as per the IFRS or the accrual basis of accounting. So I would say continue doing accrual basis of accounting. That's the best way to go.
And also, about realization basis or accrual, the financial statements when you prepare, if you could demystify the choice for businesses as well, we'll get into that. लेकिन आपके पास भी कोई सवाल, you can send us a WhatsApp 0586861003. This is Talk Compliance, brought to you by Tally Solutions.
Talk 100.3.
We have CA Rishi Chawla in the studios, and this is Talk Compliance, brought to you by Tally Solutions. Now, introducing Tally Prime 3.0, the new avatar of simplicity. Say hello to the new era of simple business management with Tally Prime 3.0. You can call them 800 Tally, which is 800 82559, and upgrade to the latest version of Tally Prime today. With its advanced features, Tally Prime 3.0 will ensure managing your business will be easier than ever. The all-new reports filter, voucher numbering, and the ease with which you can save your favorite reports for future viewing voucher series have brought in a new era of simple business management. So log on to tallysolutions.com.
So the next question for you is, I think you touched on this subject just a little bit earlier in your answers, but maybe if you can kind of delve a little bit deeper into it. Can you demystify the choice for businesses for preparing financial statements, accrual versus realization basis?
Right, and thank you for that question. First of all, I must say the realization basis of taxation should not be confused with cash basis of financial accounting. So just pay attention to that. I'm not talking about cash basis of accounting. So coming to accrual versus realized. So what is accrual? Accrual is basically when you have incurred the expense but you have not paid for it, you actually book it in your books. So that's what is accrual. And then the realization comes basically that it's very similar in a way, but imagine that you have a property which is gaining market price over a period of time, but you're not selling it. So what do you do with the difference? So that could be whether you book that right now or you wait till the realization of that profit. So something like this. So let me give you one example again here. So investment property, same subject I will take up, so it's easy to understand. The IAS 40 as per IFRS requires that you should recognize your investment properties. Investment properties are your real estate which generate income for you. Either on cost or on a fair value basis, right? Similar provisions are there in the corporate tax, but you have to make a choice which one you will take. You will either take carry on with the cost basis, or you take as a fair value as a model. So when you take a fair value as a model, at the end of each financial year, you have to fair value the assets. So any gain or losses during that period, even the asset is not sold, then get subject to tax. Whereas if you follow the cost basis, basically whenever you sell the assets, that time profits get subject to tax. Of course, there are rules relating to transitional provisions, which I spoke a little bit earlier. That has to be taken care as well while you're planning this. Yeah.
Superb. And if you have any questions, you can always get in touch with us on 0586861003. Now we talk about corporate tax. The implementation is happening for businesses. If you do business in UAE, you are subject to corporate tax, right?
Right.
But what about businesses who are established here but have operations in other countries as well? For example, DP World, I think they have operations in other parts of the world. So what happens to them? The tax landscape, does it change for them?
Yeah, of course. See, basically, there are two possibilities of having operations outside UAE. One is that either you have a branch office or you have a subsidiary. So the difference between a branch is that the parent stays the same, the owner stays the same. But in a subsidiary, the ownership can be different, but it's completely a separate legal entity. But branch is usually considered part of the parent entity. So I'll talk about branch first. So branch, you have a choice. Again, there are a lot of good part in the corporate tax law is there are got a lot of options given for businesses to plan properly, which suits their business model, which suits their profile. The option in the case of branch is either you can consolidate that branch into your parent company and then accordingly do your tax filings. Or the other option is you keep the branch as separate entity, separate as a permanent establishments outside UAE as separate entity, and you do not consolidate. But there are certain conditions attached to it. One of the main condition I would say is that the branch, if you want to keep it outside it, then specifically if you want to consolidate that branch into your books here, then that branch should at least be subject to 9% tax, corporate tax. So that's one of the important
in that country.
Yes. Yeah. If it is below that, then there is a different rules to be looked at. So that's about branch. And when it comes to subsidiary is it does not affect the taxation in UAE, so it's actually a separate legal entity, except there are provision of place of effective management, which is POEM, in simple words said, like if it is effectively managed from UAE, then it has to be looked at differently. So I don't want to confuse you more on that.
So I want a little bit of clarification on this. For example, if my branch is there in India and I am paying tax according to, I have a choice of consolidating. So if I'm paying 30% tax, let's say in India, then does it mean I have to pay tax here as well for the income generated there? No.
No, if you are paying the 30% there, you have choice
done.
not to consider. You don't have to.
Now, if I'm paying 9%, I've consolidated here. So, do I have to pay the difference there, or do I not pay the tax to the Indian government as a?
No, see, basically, if you are keeping it separate, you pay the tax in India, and then you keep it this separate. If you, for example, consolidate and pay the tax here, you have the choice to take the credit of the tax paid, but only up to 9%. You cannot take 30% credit like that. So
okay, because you're paying in UAE, you're paying 9%.
That's correct.
So you can take the credit there.
Yeah, credit there, but up to 9% if you are adding up here.
But right after news and sports, अगर आपके पास भी सवाल, do let us know 0586861003.
Talk 100.3.
Daybreak आप सुन रहे हैं. Tally Solutions bring to you Talk Compliance every Mondays and Fridays. And to quickly remind everyone about Tally Prime 3.0, the new avatar of simplicity. Say hello to the new era of simple business management with Tally Prime 3.0. You can call 800-TALLY, which is 800-82559, and upgrade to the latest version of Tally Prime today. With its advanced features, Tally Prime 3.0 will ensure managing your business will be easier than ever. The all-new reports filter, voucher numbering, and the ease with which you can save your favorite reports for future viewing voucher series have brought in a new era of simple business management. You can also log on to tallysolutions.com.
Yes, and we have Rishi here in the studios. We've been talking everything tax. You did touch on this next one just a little bit, but you mentioned about foreign tax credit. Can you talk a little bit more about that?
Thank you for asking that question. So, as I mentioned earlier, that there is a possibility that for certain entities, especially in the case of a branch, which you are going to report as part of your parent entity in UAE. So now, what happens in case if you have paid tax on that particular branch outside UAE? So what happens to that? So one thing I mentioned to you is that it's important that the branches should have minimum 9% tax in the country where they're operating. That's very important. Secondly, the tax which you have paid outside for that particular branch, since you have to do your filing, imagine you have entity in Saudi Arabia or other countries in Europe, and you want to consolidate here, you pay tax there. So it will be like double paying the tax there, and then you are again going to report. So tax credit allows you to actually take the credit of the tax which you have paid outside here when you are reporting that branch here itself. So that's I would say in nutshell means taking the tax credit, and there are certain other things around it as well, which we can take up some other day because it's a long discussion. Yeah.
Right. And qualifying, non-qualifying income, I think there are still doubts on that as well. No doubt in the regulations everything has been mentioned very clearly. But for a business owner who in the free zone, there are a lot of things for him to consider, right? On a broader level, if we go to see, then they do require a professional help also.
Operating from a free zone, it sounds very, very good and
lucrative
nice.
Also,
yeah, very lucrative. There was a time when people used to go to free zone since they have the option of taking 100% ownership and all that. But now things have changed in UAE. But when you're opening in a free zone, there are a lot of different criteria in the tax law that has to be considered. So, like there are certain free zones which you don't ask you preparing the audited reports.
Right.
So that audited financials become a compulsory requirement.
Right.
That is there. And secondly, people have read about small business relief and all that.
Correct. Yeah.
But I must tell you that all the judicial person means all the corporate entities have to register for corporate tax. So whether they will pay corporate tax, they're eligible, they have started business, whatever the case is, registering for corporate tax is compulsory for all the judicial persons. So wherever they were free zone or any other place. So just because you're in a free zone, a new business does not take you out. So these things are confusing in the minds of people. That's why I'm talking about it. And then the free zone, like I said, qualifying, non-qualifying activities. So qualifying activities, it has a lot of elements involved. Like when you are doing transaction between free zone to free zone, you have to look at the excluded activity. So excluded activity, as I said, the 5 activities, which is your banking, insurance, immovable property, other than commercial property, when transacting with a free zone person, and those conditions. So you have to look at various things, whether you are doing transaction with a free zone to free zone, are you doing any excluded activities? In case you are doing any business with natural persons, are you still allowed to do it as per does it exclude you or not exclude you? And then what kind of qualifying activities you are doing, does it falls into those 13 activities mentioned for qualifying activities? And third one is the de minimis regulation, that if you have non-qualifying income, then it should not go over 5% or 5 million, whichever is lower. So there are a lot of condition, ifs and buts. You need really a nice flow chart prepared.
Absolutely.
Right?
That's right. As a small business owner, there are certain things that you really need to consider. And of course, professional help to आपको मिलेगा ही UAE में. But also small business relief pay, if you could, make us understand a little more, send us a WhatsApp 0586861003. This is Talk Compliance, brought to you by Tally Solutions.
Talk 100.3.
Talk Compliance brought to you by Tally Solutions. To get in touch with Tally Solutions, you can give them a call, 800-TALLY, which is 800-82559 at tallysolutions.com pay. Now, we've been getting a couple of questions as well. We'll get into that. But we were talking about small business relief. CA Rishi Chawla हमारे साथ. If you could update us a little bit. about small business relief.
Thanks, Vivek. So, small business relief is again a very nice, I would say, the ruling which is taken by the authorities that helps small companies, especially in the early years of their operations, so that they don't have compliance burden. And I mean, compliance is still there because they have to register and file tax, but they don't have to pay tax, or I would say simply manage their corporate tax filing. So one is that the small business relief is available to all the businesses who have turnover of 3 million or less. So that's one of the condition, and the period is also been given in the law that you can utilize the small business relief option from 1st January 23 to 31st December 26. This is the period during which you can avail this benefit. And since once you are taking the benefit of small business relief, there are simple provisions. And then the other thing is that you don't have to fall into transfer pricing rule. You don't have to worry about fair valuing, doing arm's length transactions and all that. So small business relief, in my view, is a very good regulation which authorities have given. So yeah.
Superb, yeah.
So, how does the introduction of a tax regime impact immovable property held by individual that was already bought before the regime came into effect?
Right. In the case of natural persons, I'm sure you know in UAE that large part of assets are bought by a lot of expatriates and lot of individual local residents and nationals, and most of the assets actually are in the name of individuals. So this was one of the major concerns at the beginning, that what happens to those assets, whether it will be taxed or not taxed, what's going to happen. Like if you compare it with VAT, for example, in the case of commercial properties, the VAT is applicable, of course, when the income is above the threshold. And now in the case of natural person, when it comes to corporate tax, the law is very clear that if it is owned by natural persons and that is not involved a business activities, when we say not involved a business activities, it means that you don't actually need a license to own or operate or do any kind of those kind of things with those properties. So if you are purely holding as an investment in your name, generating income out of it and doing those kind of things, then actually that is outside the scope of the corporate tax. So you can continue to hold and you go and sell in the tax years. It does not really mean that you have to pay any corporate tax on that. For individual, basically it's quite simple that you can hold it for investment purposes, earn income on it and sell it as you like without getting worried about the corporate tax. But you just be careful on one part, that it should not be the activity which would ask you to take a license. So if any activity, like if you are operating, say, a holiday home or something like that, you might need a license to operate those activities. So that can take a shape of a business activity. That's what I feel.
So we got a question from Naresh, and he's been asking similar sort of question because he really has this concern. I have a foreign branch in UAE, Davza. The head office is in Belgium. We do business entirely Middle East from here in Dubai. Accounts are maintained in Belgium. So do I need to open separate books for UAE? My financial year ends on 31st December, and based on that, do books need to be maintained for UAE from January 2024? The business is through distribution.
Right. So if you are operating a branch in UAE, of course, I don't know whether you're in the Dubai airport free zone. Davza free zone. So Davza free zone is a designated zone. So I don't know whether you're registered for VAT or not. So basically, like if you are operating a branch here separately, so of course separate books of account are required, because you will have to register for corporate tax, because that will be considered as a permanent establishment in UAE, and being a judicial person, you will have to register. So register, and when you have to file the corporate tax returns, you will have to have separate books for that. I'm sure you don't want to file for the full parent, right? So that's what I feel. So books of account should be separately maintained, yes.
So January 2024 to December 31st, this is the financial year that they're following in Belgium.
Yeah, so the calendar year is quite popular in UAE. This is most of the companies here. So they have to basically maintain books for the calendar year basis. Yeah.
Right. Superb. Naresh, I hope आपके सवाल का जवाब मिल गया हो. Stay tuned to Talk 100.3. अगर आपके पास भी सवाल, CA ऋषि हमारे साथ for the next 5 minutes. Stay tuned. 0586861003.
Talk 100.3.
Talk Compliance brought to you by Tally Solutions. CA ऋषि हमारे साथ है. Now, a quick summary तो हम करेंगे ही, of course, of all the points that we discussed. But a quick advice from CA Rishi to all the new companies who are setting up in UAE. What should they do and what should they consider?
Yes, Vivek, I think this is a very, very critical question because, I have personally seen, people have opened the company already in the free zone or in the mainland, and then they talk about tax planning, and then they're talking about, why should I pay corporate tax on this and that. They have opened an office in the mainland and all the business are offshore and, high sea sales. Why you have to pay it? Because, you have to first of all accept the fact that VAT law and corporate tax law are two different laws. So you cannot just copy paste formulas out of VAT into the corporate tax. This is one of the very, I would say, normal thing which is happening. People who are not clear about the corporate tax regulations, they feels most of the provisions of VAT will be applied into corporate tax, which is not the case. So when you're opening a company, it's very important, I would say, some points to look into. One thing is, I would say, you have to understand your business model, which is whether you're going to do business within UAE, with the customers within UAE or not. Secondly, are you going to do any business offshore or are you going to do high sea sales? So like in the case of designated zone, high sea sales is clarified, could be outside corporate tax purview, but the high sea when you are doing in the mainland, it's part of a license, mainland activity. You cannot just say that I'm doing high sea sale, I should be away. So these provisions to be understood very clearly when before you're starting the business model. But there are a lot of benefits of opening a company in the mainland because you can do business with the government authorities. It's very more recognized. It's a better place to do in the mainland than free zone. But you have to still understand who are your customers. What kind of business you're going to do? You're going to do within UAE, outside UAE, offshore. So this question you have to jot down and take a decision. Very important. Secondly, you have to think about the aspects whether you are going to generate qualifying income or not generating income. Are you into the excluded activities or not excluded activities? Do you meet the de minimis? So all those conditions of a free zone is also important to understand before you open the free zone. So after you open the free zone, book all your revenue and you come to tax year after 9 months and filing, and then somebody surprise you saying that sorry, you do not qualify. That is like killing.
So business restructuring, then you go forward for that and it'll be a task.
So business restructuring, I would also like to mention that there are anti-abuse rules in the UAE tax, in the corporate tax, GAR rules. So you just cannot do restructuring just to avoid taxes. That is definitely not allowed, and I would highly recommend not to do that. Better when you open the company, do a conscious decision. If you have to worry later on, why don't you worry now before you're starting the company? So that's also for the large multinational enterprises. I would also like to touch a little bit upon, BEPS 2, which is coming out of OECD guidelines. Basically, there's something called a global minimum tax, which is expected to come in the coming years.
15% if I'm not wrong.
Yeah, that's 15%. But that is for very large multinational enterprises. So that is also, if a company is already sitting into a M&E category already, so there is maybe now or maybe 2 years, we don't know when it is going to get applied straight away into the UAE corporate, but it will come at some point. So all these conditions to be looked at now, because once you open the company, you set up your business, you do transaction, you first of all, because of GAR, you cannot do changes. Secondly, why to take the inconvenience later on when you have a choice now? The tax is in front of you. Talk to a good expert. There are a lot of good people around who will give you a genuine advice. Talk to them and take the right decision, move forward.
Superb.
Before we let you go, how can somebody get in contact with you?
Right. Thank you. You can contact me where I'm very active. One is I'm very active on the LinkedIn. So you can look for me, CA Rishi Chawla on LinkedIn. You can connect with me. Secondly, you can drop me an email at Rishi, RISHI @premier-brains.com, which is PREMIER-brains, BRAINS.com.
Super.
Thank you.
Yeah. Thank you so much. But LinkedIn is the place where you can get in touch with CA Rishi Chawla, and he's very active over there. It was such a pleasure. Thank you for sharing so much of knowledge about the implementation and the aspects and the all the key elements which we need to remember. Thank you so much, Rishi.
And thank you for having me. Pleasure talking to you, and thank you for asking those difficult questions. Happy to help.
Thank you.
With Vivek Sanu and Muriel Desaw.